Good afternoon, everybody, and welcome to this edition of Ask the Experts. My name is Capolingua. I'm the market analyst over here at Think Markets, and it is a pleasure to be with you as we delve into the depths of your portfolio, try and unearth the stocks you should be looking to keep, maybe turf out, figure out which ones we're going to turf out, and hopefully look at some new stocks that you might want to add. The first one here has come from Jean, and this is AKE. He's asked for an S32. If you're wondering what software platform I'm using, I always get questions about it. It's called Amy Broker, but no other reason. It's just the one I've always used for most of my trading life. It's a charting package, and I'm sure you can replicate much of what I do on your charting package. Let's have a look at AKE. And if you know me, you know I like to look at my trends first and foremost. So we're looking for an uptrend, both in terms of the short term and the long term. They're measured by my moving averages. If you're wondering what moving averages I use, I'm using, if I hover there, that's probably actually pretty instructive. You can see at 21, that's gone away, hasn't it? 21.34 is my short-term trend zone, and then 144.233 is my long-term trend zone. They're exponential moving averages. Very important you use exponential, not simple, because they just respond faster to what's going on in the price action. Moving averages are very delayed in themselves. They're slow to respond to price action. Price action is number one, I should say, in terms of you making your technical analysis decisions. But moving averages are great for giving us that, overall trend. So why those particular values? They're just the ones I like the best. I've used many over the years, and these are the ones I've settled on at the moment. Not to say I might not improve them down the track. And yes, for the very clever out there, they are all Fibonacci numbers as well, aren't they? What a coincidence. So short-term trend is up on this one. It's the light green zone there. It will be light green when it's up. It'll be pink when it's down. It'll be orange when it's indeterminate. Well, okay, there's a bit of formula going on to make that happen, a few other bells and whistles. The long-term trend is up, that's dark green. It'll be follow that same sort of traffic light system when it's not up or when it's going down. So I like to see two trends pointing up, and that's a great visual cue. So without having to potentially zoom in to look at the price action, I can get a quick cue as to whether, as I'm flicking down the list of charts, whether I need to pay more attention. So straight away, tick on that one. Then I like to look at the price action, which I said is more important to me, and the only reason why I'm looking at it second is when you zoomed out a bit, it's harder to look at that price action in great detail. Okay, so that's why and where those moving averages are coming in now. So price action, I like to see higher peaks and higher troughs. Right now we are seeing higher peaks and high troughs, but the last peak is unknown, so we don't know where that's going to complete. And if we were to see a lower high and a lower low on the next candle, it would draw this peak lower than the last one. Okay, so if we label this as P1, P2 here, P2, and then obviously we've got troughs, so T1 and T2. You could see obviously we want P1 to be higher than P2 and T1 to be higher than T2 as a minimum. Let's call this one P0. And we'll put a question mark after it because we don't know if it's going to form, and it may not form tomorrow because we would need an extra day for it to form. A lower high and a lower low would cause the peak to occur. So is it there? Is it there? Is it there? So all we know at the moment is that we do have higher troughs. There's T1, there's T2. Sorry, this would actually be T3. You get where I'm going with this. So that's good. Now, it's one thing to have good price action, but it's better. Okay, this price action, I would say this is, let's call this poor. Let's call this poor PA, right? So what is good PA? Good PA, question mark, okay? And good PA looks like this. So yes, we're gonna have pullbacks, but the pullbacks are fairly shallow compared to the rallies, okay? So technical analysis is simply measuring the relationship between demand and supply in the market. So if we say that, supply is caused, the down moves are caused by an excess of supply or diminished demand. That makes a lot of sense. So if we call these down moves, we say that let's just say supply it could be caused by excess supply. It could also be caused by the same supply but diminished demand. But let's just say supply is in control, right, for the down move. The up moves, let's just say, because it could be a diminishment of supply, the same demand, diminishment of supply, the price goes up. Right? Or it could be the same supply and more demand. Or it could be more supply, but just even more demand. These are all possibilities. Either way, let's just say, to keep it simple, demand is in control. So it makes sense that if we're seeing, obviously, if we want something to go up or we're long something, we're looking to get in. We want to see lots of demand in control. We want to see very little supply in control. Now, supply is going to come into control at some stage. You can never have a situation where demand is in control all the time, of course. So we're going to get pullbacks, but we want to see small pullbacks relative to the rallies. And here's the other kicker for what is good price action. And I will almost turn this into even what you would classify as great price action, is where that peak and this trough here. So the alignment vertically, the vertical alignment of previous peaks with future troughs, right? So that's the line I want to put it there. And what we want to see is that the troughs are coming in higher than the previous peak, okay? And the reason for this is that these old peaks, these old points of supply, they should act as points of demand into the future, right? That's what we're expecting in good, healthy price action. And the reason for that is that at this point here, you had a bunch of people selling. Okay, how do we know they were selling? Well, the price went down, of course. So we know they were selling. Now, you've got to think, the person who got in, let's say the person who got out at point X, how do they feel now at point Y? Okay, the person who got out at point X at point Y feels pretty silly about that. They realised how good this stock is now, and that they really should have held on to it. So the person who got out at point X, now at point Y, thinks, you know what, I want to get back into this stock because it is actually going higher. But of course, I want to get in as close to where I got out as possible. It's just a pride thing. You hate paying way more than where you got out. So ideally, you can get back in close to where you got out. And that's why these old points of supply tend to act as points of demand. Now, in addition to this, you've got the big fund managers. They don't like to buy at Y and above. They like to buy on pullbacks. Okay, they want some correction to occur, supply to come out, and that supply is what they want to soak out, because in the long term, they're looking to get set. And they'll be looking to buy on these pullbacks close to X. Now, if they know that there are going to be buys in the system at X, they'll want to start to buy before X or higher than X. Okay, and this is why we find that previous points of supply tend to act as points of demand in the future. But the higher that point of demand relative to that point of supply really just tells me, it tells me a great deal about how much demand is in the system. So if we've got that being high, it's telling me that there is a huge amount of demand coming into the system. Okay, and it really, to be fair, can turn good price action. Really can turn it into great price action. So this is giving you, I guess, some tools here to look at your charts down the track, and maybe, hopefully at some stage, not even need me to analyse your charts because you're so good at doing it yourself, but understanding the difference between good, of course, the D parts are bigger than the S parts, but then also what makes it great. So where these troughs are coming in higher than the previous peaks. Now we can look back over here with an educated eye and ask ourselves what sort of price action we're seeing. So yes, we've got a short-term uptrend. Yes, we've got a long-term uptrend. But the price action is telling me that when we have supply, there is a significant supply in the system proportionally to yes, the demand that is very much in the system as well. Okay, so it's not clear cut. It's not telling me that there's a great deal of overwhelming demand in the system. So look, I'd probably give this chart and I know this is frustrating, but it's all going to be in the recording. Don't worry. And I just want to do this because I just want to look at the candles now. This is kind of the final piece of the puzzle. I want to see lots of white candles. And I'm seeing a really sort of 50-50 mix here. So the market's a little bit undecided. I'd probably give this chart a solid, well, I was going to say 7, but I'm going to go 6.5 out of 10. Okay. And hey, let's face it, you've got a limited amount of money. If anybody's got an unlimited amount of money, you probably are not going to be listening to my presentation. You don't need to. And we want to put our money in the best place possible, right? So if you're looking at Allkem, or you've got Allkem right now, and you're saying, well, do I want to keep a 6.5 out of 10 in my portfolio? Do I want to find a 10 out of 10 for that exact same money? And I don't think we need to say a whole lot more about this. I think it's worth a hold. I think there's enough in it to call it a hold. But for me right now, I wouldn't call it a buy. What would turn it into a buy? More white candles, the right types of white candles. I'm sure we'll discuss that later on. But in price action improving. So let's start to hold above our last peaks with our new troughs. Let's get our extensions much bigger than our pullbacks as well. I know that was a bit of an extended explanation of this one, but what it does at the start of these presentations, it sets us up. It'll save us time. Trust me on this one. It will save us time down the track. Now, I went to type in S32 for some reason. It's given me 360. That one doesn't look great if you have it short-term downtrend, long-term downtrend, price action candle's not too good. Let's see if I can get S32 again. This one looks pretty good. I only gave it a pretty good because there's a little bit in here of this down bit, okay? And that's not the end of the world, because you've got trends within trends, don't forget. And you can see that this extension, we'll draw this last little bit here. We don't know where that's going to end, but you can see that this last extension has actually, to be fair, sort of held above what should be a pretty significant demand point. So this old point of supply here is acting as a nice point of demand here, and it did it with actually a really nice candle. So it could be better. It could be better, but I'm taking some heart in the fact that this area here is showing demand, and it's happening at a good level, because we can see that it's also happening in our dynamic trend zone as well. That's a bonus. So that's our light green zone, which tends to support prices. In the past, it's done a pretty good job of it. So this is, I think, better than the last one, okay? But it would be even better again if we had a bit more of an uptrend in place. So you might be saying, look, buy, hold, sell. Look, absolutely 100% it's a hold. I can't see any major reasons to sell it just yet. If you took 1/3 profit here, I would not begrudge you that and be holding on 2/3, waiting potentially to buy back your other third. What would we need to see potentially to upgrade it to a buy? And let's say we saw a little bit of a rally tomorrow, and then we saw a pullback the day after that, and then we saw a bit of a move like this. Okay, so what we're forming now is everything I've been asking for. So we're starting to get the price action where we have, and that it's kind of a bit skew. Let's fix that one up. So let's get this high here. So that high there is 502. You can't see it on screen, but I promise you it is. And I can literally just go 2 there and then 02 there, and it'll give you a nice flat line. And let's say we saw it $5, big round number as well. So pushed above 5, pulled back, held 5, telling you that demand's coming in now. 5 is not resistance, 5 is now support. And then we're moving back with larger extensions, smaller pullbacks, and we've got our new trough above our last peak, and that would upgrade it to a buy for me. So for now, I think it's very solid. I think you can hold it, but to upgrade for a buy, we need a little bit more price action and some nice candles as well. So that one was for Jean. Hopefully you saw that one, or you're going to catch it later on in the recording. The next one is NSR, National Storage REIT. I think it looks pretty good. It's definitely one of those sort of longer term portfolio sleep at night stocks. Happy to hang on to it. I can't see anything too sinister there. It's a bit overlappy, isn't it? Lots of overlap. But the thing I like the most about this, and hopefully you can spot it straight away, is all of the white candles. Look how many white candles there are on the screen. So that indicates to me a lot of latent demand in the system, and I'm pretty happy with that one. So definitely hold. If you are looking for something a bit more boring for your portfolio, something you probably sleep at night a bit more with, and this one's probably fine to buy. But hey, it's not going to be 260 and then $10 next week, that sort of thing. That one's for Kevin. Bluescope is for Craig, and that's the final of the catch-ups from last week. Interesting, if only to talk about some of the things we've already talked about and some of those foundation concepts. So if I was flicking through a list, now what I'll do, and I'll do this quickly. So if I got my scan results from yesterday, if you follow me on Twitter, you know each day I put out a short list of the best trends, and then I will narrow that list down. That list could be 100. So it starts at 2,500. How many stocks in the ASX? I look at every stock, of course, and then it comes down to maybe 50 or 100 or whatever, and then I narrow it down to just the stocks I really like, and I create charts for them and then post them on Twitter. I think that's pretty generous. So let's say this is the short list, so 92E. I'm looking at the trends. So I can just go down very quickly, and the trends will pop out, the strongest trend. So that straight away looks like a really strong trend. Aussie broadband, you can see the beautiful bright green and the green. So it's very visual, but very quick. That pops out to me really well. Alligator Energy up again today. So what I can do there is I right click on that one, I put it into an even shorter list, and I'm narrowing down. But it's the ability to get through a list very quickly, because if it's a big list, so something like that, really nice, I'm going to shortlist that one. That one's half interesting, I might shortlist it, come back to it. That one's a bit flatter, you can see. So very quickly, that's what the moving average. So this one I'll shortlist, looks really interesting, REA Metals. I actually did put it in the shortlist yesterday. So visually, I can move very quickly through a list, and then because you want to spend a very little amount of time on a bigger list, And as your list gets smaller, you're then allowed to spend a larger amount of time. It makes sense to spend little time, a large list, large time, small list. Okay, so let's get back to the point. And the point is, I have to find a point at some stage because many of you will be screaming at the screen saying, Carl, get to the bloody point, mate. Here's the point. Bluescope Steel. Is this something I would shortlist? No, I wouldn't. I would just literally skip past it on the list to the next one. I would not even look at that one. Okay, that's the point I'm trying to make here. There's not enough in it straight away in the trends to draw me in and then to look at all the rest of the stuff. But I think you can see that the rest of that stuff is not great either, right? So the price action's very, very muddled. The candles, there's lots of black candles in there, lots of resistance. Every time it pops up, there's somebody out there trying to knock it down again, trying to sell it, trying to take advantage of higher prices. Why? Because they're looking at the rest of the market and go, wow, there's 100 other things I want to buy with my money in Bluescope right now, and I'd rather sell Bluescope. Doesn't mean it's not going to go up at some stage. It just means right now it's not the one everybody's looking at. So buy, hold, or sell for me. Look, I don't know. I mean, it's maybe I could squeak in with a hold because we've got a little bit of a trend developing through here, but it's certainly not a buy. Okay, for all the reasons we discussed. Now let's get to today's questions, and we've got one here from James. He says, "Hey Carl, hope all is well. All is well, James. Thank you very much for asking. This week he's interested in REA." And James, this is what people tend to do in these questions. They tend to give me a bunch of fundamental analysis. Okay. Good old James and his fundamentals. He's telling me that new listings numbers are up 14% in January year on year, and some director acquisition activity at the price of $137.89. Charts having an amateur guess. Circa 136 price tag is a support level. Okay. Now, the fundamentals, hey, look, I can't say I completely ignore them. That's not right. That's not fair to say that. I will look at stocks who have great charts. So let's just get this right. The stocks whose fundamentals I look at are the ones who have fantastic charts. How about that? Again, it's about not wasting time with stocks that the market's not interested in right now. Doesn't mean they're not going to be great down the track. It just means the market's not interested in them now. So why am I interested in them? When the market's interested in them, the charts will turn up, and probably because the fundamentals are turning up, let's face it, and that's when I'll look at them down the track. Okay. Do I need to look at REA right now? I think for all the reasons we've talked about up to this point, probably not. Look, the trends are still pretty much set to the downside. Certainly the long-term trend is turning. And if anything, the risk here in terms of the technicals is that this area up here is probably going to be a nasty area of supply. Okay, it's kind of the balance point between where we were in an uptrend and where we're in a downtrend. So all the way through here, where people are thinking, I really love REA, and they're buying because they think it's going to go up for whatever reason. When they get down here, they go, I wish I didn't own REA. Okay, that's kind of how they're feeling down here. And if the price gets back up to this level where a lot of them got in, how do you know lots of them got in? Well, look how much price action we had here. So lots of people, lots got in around here, right? So if it rallies back up to that level, guess what they're doing? Lots are at, let's just call it BE for break even, right? So lots of them are break even. You know how it feels when you're in this part of the curve. We've all been here. Oh God, I wish I didn't have REA. Why did I buy it? I knew I shouldn't have bought it. I tell you what, if REA goes back up to where I get in, if I can just break even on this thing, I'm out of there and I'll never buy REA again. Or insert your favorite stock in that one, or your most painful stock in that one. So if lots of people are breaking even there, it means lots of potential supply, right? And this is how points of supply form. This is what we call points of supply. And after the fact, some very clever person who read a book on technical analysis once will call it something else, which starts with R, resistance. I don't talk about support and resistance. I talk about points of demand and points of supply. Resistance and support is something somebody wrote in a textbook one time, and everybody read that textbook, and then now they are experts on technical analysis because they talk about support and resistance. But what I want you to do as technical analysts is think about the most important thing about anything in the markets, and that is demand, supply, and the interaction of those two factors and how it manifests itself in the charts. Okay, it manifests itself in trends, in price action, in candles, in volume, in volatility, all the stuff I like to look at. I can get to the point very quickly with REA, and I can say that it is not a buy for me. Can I call it a hold? Probably not. I'm probably going to vote on if you can get something around 150. No, let me just be even more specific here. So if in here, okay, so this is, sorry, James. Okay, James, so in here, watch in here. If we get in there, right? If we get in there, and in there we see, now how am I going to do this in a clever way? Okay, let me do this. If in there, all right, we see, okay, if in there we see these candles, let me just point to those, okay? If in there we see candles that look like that, what that is communicating to you is that the supply is in the system. And this is the other key thing about technical analysis. Don't assume something's going to be a point of supply. Don't just say, oh, that's going to be a point of supply because it should be. Wait until you get some signals in that area. So in this area here, all right, in this area here, if we see these candles, it's telling you that the supply we expected to come to the system is in the system, and therefore we need to be super careful. And at that point, if I saw those candles, I would get out. Now, if I saw other candles, let me show you, candles that looked like, and let's go from the same point. Hopefully this is making sense to someone. If I saw candles that looked like, oh, I'm going to go for him, and I'm going to go for her, and well, let's be non-binary. I'm going to go for it. Okay, non-binary candles here. So if I saw candles that looked like those three in that spot, then there is no supply there. In fact, there's demand. In fact, there's accumulation. In fact, instead of being a point that you should be afraid of, it's and this is a stock we should be out of. This is a stock we should be embracing. Okay, right now there's not enough for me to tell you to buy it. That's for sure. And it's anyway, you've got the roadmap on that one. I think that one's pretty well explained there, James. Now I know James because he's such a nerd. James is going to want to know what the fundamental valuation on REA looks like, and let's humour him here and let's have a look at it. While that's loading up, I'll talk about what this is. It's Thomson Reuters is the product. Like I remember the old Holden Commodore, right? Some of us are old enough to remember that one. So that's Holden and that's Commodore. That's the definitive icon is the product. And what it does is it aggregates all of the expectations, all the broker consensus numbers into the future, and then of course all the historical data from the past. We see, for example, that on REA, brokers are pretty positive to this one. 2 strong buys, 5 buys, 7 holds, no sells, no strong sells. That's encouraging. I won't go through the whole thing. I'll just go through the bits that are important to me. So I like to see things like EPS growth. Okay, I need to see that earnings are growing. Very important. Then I need to see whether I'm paying a high price or a low price for the earnings of that company, for the growing earnings. And then I like to see, well, what is the market expecting that PE to be down the track, because I don't mind paying 40 for something now, which is probably reasonable for a growth stock. But if I hold it for a few years and it keeps growing at the same rate, lots of things need to happen to make that occur. It's going to feel more like, in a few years, if I'm a long-term holder, it's like paying 26, which is very cheap for a growth stock. Where is it in its PE range? Well, at 43, it's a lot lower than where it was in the past, so that's good too. All of that sort of comes together in this spreadsheet here, in the cells here, which allow me to make some assumptions. So we've got a benchmark PE, what we're going to compare the PE to for this company. And is 35 a fair benchmark PE? Well, it's certainly very low. So, you could even go higher than that. But this is actually the median of it might be the median of those 4. I can't remember what I did in the spreadsheet. Going forward. But I could also say, well, historically, and you watch this, if I go dynamic and take in, if I go historical and take in just the historical readings, the valuation goes through the roof, because you're basically saying, well, you can have a much higher PE. If I go dynamic here, it takes in all of the PEs, and because of the influence of these very high numbers, it's still high. I like to go with trends. I'm a trend follower in my technical analysis. I'm a trend follower in my fundamental analysis as well. So I want to work on what the brokers are expecting, and that's what this does. Okay, so we're using this as a median of what they're expecting for the next three financial years. High risk, low risk, moderate risk. I haven't done the research on REA for a while, so I can't say. But hey, it's the housing market. interest rates are going up. Let's be conservative. Let's go with moderate here. But it does have great growth. I've got no reason to doubt the brokers on this one, so I'll stick with it. I think REA is quite fairly valued here. I think it's on the border of a good value as well, given that this is a very low benchmark PE. So that would certainly give you indication to hold it. The broker's price target is a bit better than mine, and that's not surprising because when a stock tends to go down, the brokers leave their price targets very high. There's a delayed reaction between them lowering those targets. So I'd go with that. I'd say that's a more accurate valuation given the current fundamentals for REA. Warren has asked for PDN. I won't type PDN into the fundamental analysis tool because it doesn't have earnings. I know that for a fact. And let's go here and then go PDN, and it looks pretty good. Short-term uptrend, long-term uptrend. Price action's not great, but we do have a bit of a consolidation through this sort of zone here, straighter line through there. So this is usually a pretty good pattern with the rising peaks and a little pennant there. Could be better, no doubt could be better. What would make it better would be something like this. So we see it pop through, okay, we see an extension, we see a small pullback that holds above this horizontal line, and then we go again, and that would actually push this more into a buy for me. But I think it's a solid hold for the time being. Andrew has got QXR, which was going gangbusters. Hopefully it's holding up today. Look, a little bit of a disappointing candle today, isn't it? But it has done really well. Now, Andrew, what's your opinion? Do you reckon that's enough there to cause us to manage our exit? I don't think it is. It's not a great candle, pushing higher, probing into supply, hoping that demand will follow us in, and then it didn't quite happen. A little bit disappointing. Could be better, but one bad candle does not a reversal make. So I think I would stick with this one. With everything else, it looks really good, doesn't it? Price action, yeah, it could have been slightly better, but otherwise, look, it's a very strong, very, very strong chart. Nothing in here to tell me that this trend cannot continue. So very happy with that one, would stick with it. AS2, which is another one which has done well. And just checking the time, I actually do have one more update and I better click it. I'll do something off screen, you can't see it. It's where I have hourly updates from my data provider, which is Norgate Data, which works specifically for ARB Broker here in Australia. And they give me hourly updates, and you're going to see maybe some of the candles change here. And that one actually got a little bit worse. And just for completeness, let's go back to PDN. I won't go all the way back. PDN's still pretty solid. And the other one, QXR, yes, didn't get any better, did it? So same ditto on that one. Look, it's still a hold. I don't think we need to get out yet. And then AS2, which is looking a little bit more sinister than the other one. But hey, the candles are still open. We're still open, right? So these are live candles. So we do need to be disciplined, which equals wait until the close, then make your decision. And the reason for that is because you could say, well, that's a terrible candle, and I get out, and then by the end of the day, it's just powered back up to the top and actually created a positive candle, a buy-side candle, a candle that you shouldn't be getting out on, that you should actually be adding more to. So it's very important we do wait to the end. Now, the risk is, of course, it gets worse and worse, and then it does become a sell. But I find in the long run, you'll be better off making those decisions at the end of the candle. They're very strong. These are very strong charts. This one is even better than the last one, to be fair. This one is better than QXR. Because if you look at sort of the price action here, you can see, and this is that great price action, isn't it? We talked about, and I'm so glad we could find a case study here where we can see the extensions so much larger than the pullbacks. We can see that the point of supply here, point of supply, we saw the point of demand come in above that, which is great. It's definitely lots of demand in the system. We saw a bit of a push on the volume as well, and great price action for now. So I'm going to give it the benefit of the doubt and call it a hold. Would I buy it today? No, obviously I wouldn't buy it today. There's no need to buy it today, but definitely hang on to it. They were for Andrew. Now he's asking for MAY. Okay, very quick. These are more sinister, aren't they? Closing at the lows, 2 in a row. Definitely, this is enough here for me to go, well, it's had a great run and go manage, exit, which for me equals minus 1/3, and then see how we go with the rest of it. Okay, why? Just a third, why not? Hey, lock it in, bang, that's a great trade, because this thing could be 30 cents tomorrow, it could be 45 cents, who knows? I don't want to miss out on that. I'm going to lock in a third, take some profits. Now I'm playing with pretty much the market's money, and we'll see how we go. You only need a few of those to really, really hit and keep going. 4 cents to $1, 4 cents to $4 to really pay their way. Good candle, encouraging candle coming in today, happening in a fairly logical place, I think, because there was a little bit of a sort of an inflection point of demand there. This is sort of the real demand point, though. So ultimately, this is probably the big support point. Hopefully, it's going to be pretty painful. It goes from 15 to 10 to get there. But on the basis of today's candle, and assuming it doesn't get any worse than this, then I would just stick with that one. Would I buy it here? No, I wouldn't buy it here because we've got this to deal with. And what needs to happen now is we need to start to rebuild some good price action. So obviously we're coming down at the moment. Then we need to start to do something like this. Okay, and that's when it would be upgraded back to a buy. And you might want to add back the 1/3 if you're not in it, get in it. Good. That's for Andrew. Now let's go to Anonymous. Anonymous, stop being anonymous. Pop in your name next time. But Anonymous has been, look, for an anonymous attendee, a little bit greedy here because he's gone for 4 stocks. Haven't you, Anonymous? Let's have a look at them. Xero. I don't like Xero. I don't need to explain why. It looks terrible. Do you really need my explanation? I think I've pre-explained a lot of this. $100 is a problem now as well. Now, here's the thing about everything I'm going to talk to you about today. I could say, I don't like that, it looks terrible, and tomorrow it could be up here, and then you'll be cursing my name. This is all about probabilities. I don't know the future, and if you tuned in because you thought I did, you are going to be extremely disappointed. All I know is that based upon the balance of probability, if we call this scenario 1, and we call this the stock going further down from where it is scenario 2, all I'm trying to give you in this presentation today is what is the most likely outcome, okay? And for me, based upon my experience, which I can assure you is substantial, I would suggest to you that scenario 2 is more, I know this is bad grammar, more prob than scenario 1, okay? And that's how I suggest you base all of your decisions in the market. Come up with 2 scenarios, and there could be a third, there is a sideways, but hey, who wants to hold a stock that's going sideways? Come up with 2 scenarios for your stock. Yeah, especially if you think you're getting out. We hate to get out at a loss, don't we? We hate to get out of something that's underperforming because our assumption is as soon as we get out, guess what? I tell you, this could be the case. It may well be the case that little, that little circle dot at the top of your laptop there or on your webcam, it is secretly on. It is secretly on. It's secretly recording. It comes on every time you log into your broking platform. And there's a direct feed. Imagine what was that? Adjustment Bureau style with Matt Damon, right? There is a huge room full of people in black suits who their task is they're assigned to watch an individual who is trading shares. And I can tell you that as soon as you get out of Xero, for Anonymous, a red light will start flashing on their computer and they will cause the market to start buying Xero aggressively, okay? Just to stick it to you, just to annoy you. And that will continue to go up. And Xero will keep going up as long as you're out of it. Now, I can promise you that as soon as you cave in frustration and buy Xero back, in disgust at a much higher price, another red light will flash on that person's keyboard there at the Adjustment Bureau, and they will start selling Xero aggressively again, just to stick it to you. So that's what we're betting on here. Scenario 1, Adjustment Bureau is real, and as soon as you get out, the stock's going to rocket higher, or you get out and it keeps going down, which is scenario 2. Which one's more probable? I'll leave that up to you to decide. And I won't look at the fundamentals. I'm going to keep moving. I'm going to keep powering through. Novonix, we talked about this one many times, both on the way up where we loved it, and then on the sideways bit where we said, hey, manage your exits. I told you, if you're listening, I was there. I said manage your exits, and probably a good reason because it hasn't done so well since then. Do we need to buy it back? Look, there's some signs here that the buying back of Novonix might be an interesting thing. So let's continue to monitor this one. I don't think now is the time to do it. I still think it's early. I'd like to see it get above the long-term trend zone. I'd like to see it get above here, hold there with some nice price action. We know the price action, we know the candles we want to see, and then probably moving back through somewhere like 7, I would entertain this idea that the market's starting to like the stock again. And I'm happy then to take it from 7 to wherever it might go. Now you might say, Carl, that's just silly, because if you think it's going to go up, why don't you just buy now at 6 or 5.80, whatever it is, and you can get in, a whole $1.50 cheaper, 30% cheaper. Why give it 30%? Is because I don't know what the probabilities are right now. Okay, I can't tell you with great confidence that the probability here is skewed to the upside. I just don't know. And for me, like I said, managing your money is all about putting your money in the highest probability scenarios, and I don't think this is it. So is there enough to hold it if you were unlucky, well, not unlucky, if you just made a bad call and didn't get out, didn't follow the warning signs in the market? What were the warning signs? Well, that's a pretty big one. When you see that, that's a warning sign. So go back in the recording, clip that bit, and play that every time you see that candle. That is a warning sign that something's not right. You might want to sell some stock. And then probably somewhere in here is the next one, breaking beneath the short-term trend zone. And if you're not out by there, or certainly there, then something's wrong. So if you didn't follow those cues, then hang on to it because it is starting to warm up again, but it's not a buy for me. Let's have a look at the next one, which is VUL. I'm suspecting it's going to look pretty similar. Look, it's in a better place than Novonix in that we are actually above this long-term uptrend zone. I'm not seeing the sort of volume, the push, and the reason why we want to see that push, I call it, is because right now we've got a huge amount of latent, not latent as in come on, supply in the system, waiting, really. Waiting. Now I was going to say something very unkind. Waiting to get out. Now waiting to die. All right, this is, this is just the vernacular, right? So waiting to die. They've been in it. They got in it here, right? And and of course it hasn't gone the right way. They've paid the highest price, and they're just waiting to get out, waiting to die on this position. And they want a higher price. They want to get as close as they can to break even. So there is lots of latent supply in the system, and the only way to get rid of that latent supply, this dead wood sitting in the system there, fouling up the supply side of your broker platform there, is going to be demand. Okay, so we need to trade with these people, and if we can trade with these people, if a significant amount of supply means a significant amount of demand, don't forget volume is buying and selling. Okay, it's not one way. I hear the silliest things spoken about when it comes to technical analysis by people who call themselves experts. They talk about up volume and down volume, or they talk about went up on good volume. It's just nonsensical. If it went up and there was huge volume, there were a bunch of people that sold all throughout the day. Think about that. Why were they selling? But volume does become important. It's in certain scenarios, and I call this the push to get it going, the need to trade with that latent supply. And we're seeing it a bit more on the last one on Novonix. We're seeing a bit more what I call supply removal in VX. There it is. Okay, so you can see the difference here. This is what we call supply removal which is happening. That's good. We're getting rid of some of that dead wood. Whereas if we compare it to, say, Vulcan, not really happening yet. But Vulcan, funnily enough, technically probably looks better because we're starting to see some of this stuff. It's the price action's better. Maybe the volume is not as good. And it's about putting all of these, these pieces of the puzzle together to layer upon layer your probability, getting the probability of success to a point that's sufficient for you to want to put your hard-earned money at risk on the trade. Definitely hold on Vulcan. I don't think I want to buy it just yet. It did come up on my scan though the other day, and I almost put it on the shortlist, but I don't think I did. So I'm happy to stand corrected. Now AVL, this is a happy chart. Look at this one. So I like this one. It's one I've been tweeting about for a while. Run it as my feature chart many times. Looks pretty good there. I can't see anything too sinister. The volume, here's your push. If you want to know what getting rid of supply looks like, that's getting rid of supply. We should see volume diminish after that point because people are happy to hold now, and we're seeing less supply in the market, so the demand is finding less supply to trade with, and therefore you're getting less volume. We're watching for blow-offs though. I don't think we've seen it. I think this is all pretty healthy here. Having said that, it has had a great run. It's had a great extension, and a little bit of a pullback would not be surprising to me. Where could it pull back to? Well, this is a clear demand point. Look at the start of that candle. It's one of these little mini inflection points. No, it's not a peak. No, it's not a trough. But clearly, it is the start of some demand. So in the short term, we could see some buying come back in there. If you're buying it before, you're probably happy to buy it again. And obviously, the moving averages will catch up to that point, and we may see an area there, which would then form a higher trough above this old peak, this old point of supply. And of course, we're using our imaginations here that we eventually get a point of demand here. But we may see a little bit of a pause there. The candle today is nothing sinister. It's a hold for me 100%. Would I buy it? No, I wouldn't buy it. Why? Because we need all these other things that I've just talked about to happen. So it's not a buy just yet. That was for Anonymous. And let's go to John. John wants IGO, which has underperformed for me. It underperformed this huge nickel rally. What does the nickel rally look like? Let's have a look. This is the London Metals Exchange. So we get a PM fix. You get one price for the day. So we have to go to a line chart. You can see nickel, it looks like a big crash, but it not necessarily. Obviously, net, it's still way up. So that is good for IGO. Net, that is still good for IGO. Let's go back to IGO. Because it is predominantly nickel stock, but does have now great exposure to nickel and a little bit of copper in there as well, acquiring Western areas to have even more nickel. Let's go back to candlesticks. Looks very solid. Long-term trend, I still think is great. And the fact that this is happening above that long-term trend is still fantastic. But let's face it, we are in a bit of a sideways phase, aren't we? So how do we break out of this funk that we're in? We need to see, and we've got great candles. So one, maybe not that one there, but certainly that one. 4 out of 5 very impressive candles, which is very encouraging. Need to see just that price action correct itself, John. See something like that. And then I think we're back on again in this. And then eventually, obviously, there's going to be the issue of getting through this area here. So it's going to take a little bit more cooking, I think, but it's 100% a hold. Would I buy it? Look, I call this one a slow accumulate. I think you can buy dips with the right candles on this one, with the confidence that long-term trend will hold. So I do like that. I'm very happy with it. Okay, UWL. Let's have a look at this one. Unity Wireless. Good, impressive that it's had such a huge rally through here. I didn't see what the news was, but I'm guessing it was a news event. What's very interesting and something that you do need to watch out for is when you have these big pops, right? Now, let's face it, the psychology of a big rally, right? So let's face it, it was doing very poorly until then. And then you have this big rally, right? Now, let's face it, if we've talked a lot about this idea of deadwood and latent supply and people waiting to get out. Okay, now whatever this news event is has clearly changed the psychology of the market here, because normally when you get a rally in one of these well-established downtrends, it is that signal to sell the rally. Right, we've gone from buy the dip to sell the rally. But when you get this sort of big, let's call it a big demand pulse, right? Big demand pulse like this, right? The natural response is for people to think, oh, that's gone up too much. And even if you were, a speculative buy down here at 3 and in for a short-term trade, well, geez, you're making some good money all of a sudden, 3 to 4 in a few days. You would think that the natural response would be sell it, right? Just sell it. Okay. Now, we didn't actually see that. There actually was very little supply that came into the market here. And I'm going to suggest significant demand that just stuck in the system, like glue to this thing, buying and buying and buying. So you look how the candles got very, very small after this big pop. So when you see these big rallies, okay, but then very small, very subdued price action like this, I tell you what, that is basically as bullish a sign as you can get. Okay, it just means total domination of demand and vacuum of supply. I would hold on to this one. Would I buy it? It's actually pretty close to a buy. It's a bit of a specky buy here, just on the strength of that move and the fact that there's been so little supply in there. So it can go higher. You often see these around news events. So this pattern, watch for this pattern around news events, but mainly around earnings. Okay, this is a classic earnings pattern, and particularly in the USA. You can just trade this pattern just in the USA and it will work for you like clockwork. UWL, and maybe I'm being a bit remiss, seeing as John's a regular, let's have a quick look at IGO. I'm afraid to look at IGO, I didn't want to look at this one because it's going to be very hard to make this work. because you get crazy stuff in here, like 181% profit growth. Oh, that's interesting. The brokers have moved these around, haven't they? Because this not that long ago was flat to negative, but they're expecting, because obviously what's happening in the Ukraine now, that the heightened or elevated commodity prices to actually sustain now for a bit longer. And then you get these crashes, right, where earnings are going to crash because they expect commodity prices go up, commodity prices go down. So it makes it really hard to value these ones. I think moderate. I don't think you could go any less than moderate on this one. And let's just stick with the brokers here. Let's just not play around with any of this stuff apart from raising the risk level, which I think is sensible, and just leave everything and say that, you know what, it's actually probably pretty cheap here still. It's probably pretty cheap at 13.90 price target, 13% upside. Brokers are fairly positive to it. Well, very positive, I'd say. Just the one sell in there, but otherwise pretty good. 4 strong buys, 4 buys. Yeah, okay, so better than I expected, but that is because I think they have started to update some of those FY23 numbers, because they were quite bearish before. So they were expecting the prices of these commodities to come down much quicker, and brokers, bless them, tend to get surprised from time to time. UWL is the next one, which I can type in because it will have some fundamentals. And waiting for those to load, I'll give you a preview of what's coming up. AGE from Anthony, Liontown from Tanya, and TYM for King. Okay, I think that's loaded up now. I was looking off screen. UWL, I'm going to go low on this one. I think it's a pretty boring business and probably deserves to be at low. In terms of the target PE, has been much higher in the past. Forget those. Okay, it didn't exist there, and that's just unable to load. I think you get stuck with the previous stock. So quite low. It looks quite a challenging benchmark. So happy to leave that. I think that's pretty sensible. Again, I don't think we need to do a lot to the broker numbers here. Let's assume they've done their homework and got it right, and looking pretty well valued there as well for UWL. So pretty happy with both of those. John, while I'm here, AG, there's not going to get anything on AGE. Anthony, I can put in LTR and then we'll come back to it because we're going to head back to some charts. So AGE was the next one for Anthony. I won't do fundamentals for this. It's a little uranium stock kicking over rocks in a desert somewhere. They do have a reserve. I did quite a bit of study on this for the call last week. I said it's as good as any in the space, and it has been, one of my favourites on the charts. I think it was my feature chart 3 or 4 days ago. It was certainly been in my shortlist every day for many days. I would absolutely hold on to it. That is probably the best chart we've seen today. Assuming it closes there, that candle is fantastic. No reason why this can't keep going. And in fact, it's probably more than a hold. I think it's a buy. I like the volume too down there as well. So absolutely ecstatic with that one. Anthony, hopefully you're doing well out of it. Next one is LTR, which we'll do on the chart and then head to the fundamentals. Another one which has been coming up as a feature chart lately. Very nice. Starting to see some things going on here that are probably ahead of Vulcan, for example, or Novonix. A little bit of a pop there in volume. It doesn't look like much, but everything is relative. So when you're kind of going here, double for a couple of days is pretty good, and that is indicating some nice, and you should be shouting at your screen right now what the term we use, supply removal in the system, and we have to get rid of that supply to make new highs. It's no surprise for me that we found a high here because it is a big round number, and I can tell you, I can almost predict now that we spent a great deal of time at $1 somewhere down the track. I hope this is going to happen for me. Well, here's a consolidation phase here, and it hasn't really proved my thesis, has it? Look, it's not bad. It's not a bad prediction here. Let me do this for you, and let me go there. The wrong one, that one there. Oh, no, there it is. I'm correct. I'm perfectly correct. I have absolutely nailed it. Okay, so I said to you, it's no surprise it stopped at 2, all right, because it's a big round number. And then I said, if it stopped at 2, it probably in the past stopped at 1, okay? Why do these things happen? Well, I bet you it also stopped at 50 cents. Well, that's $5.50. Yes, absolutely, 50 cents. So this is the psychology of round numbers. We're doing a lot of topics today. People can't help it. They think in round numbers. They've got no choice. They're humans, and humans are a bit silly and a bit fallible at times. So we think, look, if we got in at 50 cents, if we hey, if somebody said, hey, you could get out $1 and double your money, of course you're going to take it. Now, not everybody's going to think like that. Some people are going to think, this thing's going $10. But there will be, a portion of people that say, oh, going to $50, $1 is great. And lo and behold, look, it stopped at $1. Look at the supply, the clear supply. Look at those candles coming in there for no other reason, but it was $1. It's just a number. It's irrelevant. It's what matters is market capitalization, earnings. That's what matters. But we're humans. We can't help it. $1. No other reason. And of course, now here's the thing. If a lot of people got out $1, a lot of people got in at $1. And guess where they want to get out? They want to get out at $2. Okay? Now, here's the good news for Liontown shareholders is the next place it's probably going to go if it breaks out is $4. You guessed it. Moving on, let's do the fundamentals for Liontown very quickly, because there will be some. There's going to be some cash flow and some earnings, but they're a bit down the track and too far down the track. As we can see, FY24, I don't have a 25, so I can't give you a fundamental on that one. Okay, I'd have to go back, do the deep dive in the company, and put in my own numbers based upon my own guesswork. And that is all fundamental analysis is guesswork. Technical analysis, I challenge you to challenge me that anything I've talked about today is guesswork. Of course not. It's all reasoned logic, isn't it? Okay, King's got TYM. Let's do this one. TYM. Look, today's candle is disappointing, King, no doubt. Yeah, look, if it closes there, it's not a nice candle at all, and I'd almost lighten the load. And you might say, you're being a bit fickle there, Carl, but I just don't like that candle, and I don't like the volume on that candle either. I'd dust a third on this just to be sure, King, especially if we're making a little bit of money on it. Hold on to the 2/3 because, look, the long-term trend is still up and the short-term trend is still up. And we can always buy that third back if we get some better signals in the market. But I want to stay liquid in this market because there's so many great stocks out there to buy. Craig's got Nasdaq. Yeah, a little bit baffling. These 4 days out of nowhere. In an environment which I only think really got worse in terms of the outlook for the Nasdaq, not better. Watch these red arrows. We're going to get, the market will tell you, Craig. You know what? This is the great thing about being a technical analyst. You don't have to do a whole lot of work. Let the market do the work. If we see, and Craig already knows the candles that I want to see. So if we see this guy here and this guy here, and the candles are non-binary. We have to be very careful with the way we speak about candles. They don't like to be pigeonholed. They are non-binary. Let's go here and let's fill this in. So if we saw something that looked like that would be white, because we're getting up there, aren't we? So that would be white. And then we saw something that looked like this. In that spot. So in here. Then I would start to be very, very concerned, okay? And the opposite of that, Craig, will be if we just saw the white one, then it's going higher, right? And that's the beauty. Just let the candles tell us what's going on. And then we have to wait a little bit more for trends to change. But I'm not convinced yet. I'm not convinced. And I really will want to see what happens at 14,164 and really 14,505. That's the key level for me, what candles appear in there before I start to swing back to the positive overall on everything. AGY. Looks great, no complaints there, hang on to it, buy it, happy to buy it even, it still looks good. You might want to wait for a little bit of a pullback or some nice candles, reverse the candles we just talked about, literally invert them, and that would upgrade it even more to a buy. But I'm happy with that one, no reasons to manage our exits on that one, Andrew. From Anonymous, it better not be the same Anonymous, going for another 4 stocks, very greedy. Holds at best, not excited by that. Look at the trends, look at the candles, look at the price action. I hope I'm wrong and I hope it goes up because I do know a lot of our clients hold Fortescue, but hey, they're long-term holders. They're not trading this one. Long-term dividend yield, self-managed super fund. They love the frank dividends. So, hold it on that basis. BHP looks great. I actually probably buy that one. I think that's much better than Fortescue. Happy with Woodside. Happy to buy that one. Still looks good. I've been saying that for a while. And BeachPetroleum is disappointing. It is disappointing, and it is a serial disappointer for many years. But even so, I'm going to say stick with that one. I'm not sure if I'd buy it right now. It's disappointing. Karoon is probably better in that space. Just look at the chart. This is from Anthony, and he's asked for GGE. And I can tell that we are just bumping up on time here. Looks great. Definitely hang on to that one, Anthony. And I'm actually confident enough to call that one a buy. Tanya Scott, if we have time, thoughts on NewHopeCorporation. Please stop typing in any new ones. We are not going to get to them. I might end it here because we are going over time, NHC, and it starts to get a bit ridiculous. I think it looks fantastic. Today's candle clearly could be better. Is it enough to do what we said, do I like to say, manage our exits? It kind of looks like this one. which if we were on Tuesday, I probably told you to manage your exit. I want to keep some skin in the game here. I want to keep some skin in the game. So let's just hang on to it and see. Famous last words, maybe that's the top. If you still got 2/3, hang on to it. If you don't, hey, if you didn't manage your exit last time on this one and you didn't get back into that third here and you're full position, knock a little bit off the table, just a little bit. Otherwise, 100% hang on to it. Is it a buy? No, it's not a buy because today's candle is a supply side candle. It's quite a strong supply side candle, and it would indicate to me that prices are going to pull back a bit, which then may give you a better opportunity to buy when you see the opposite of these candles. What candles? You need to see the opposite of these candles. So bullish ones. So we're going to see one of, well, that's the second one. And we're going to see, it's just the opposite. So that and that and that. Okay, now get the shadings right. So that will probably, it could be black, it could be white. Actually, it doesn't matter. Well, preferably it's white. And then this one following that up. And that will be exactly what you want to see in here. So that two candle combination is absolutely magic in probably around $3. Big round number, old point of supply acting as point of demand, giving us good price action. So see that in there, then it's upgrading for me to a buy. We have to stop Ask the Experts at some point, don't we? We'd love to keep going, but unfortunately, much like our capital, Ask the Experts is a finite resource. But we will be back next Tuesday at 1 p.m. to get as many of your portfolio questions answered as possible. Don't forget, we are the good guys in Australian stockbroking. Huge range of products, fantastic customer support. I challenge you to find anybody better than us. You can literally pick up the phone and call us, which is an incredible prospect in today's modern world. CHESS sponsored, of course, so you own your own shares 100%. They're not owned by someone else who's holding it for you on a custodian basis. They are your shares. Very important for your super fund. And of course, you get my analysis, don't you? Hey, if you're new to Think Markets, jump on with us. We've got a 10 free trade offer going at the moment. But if you mention that you caught me in Ask the Experts, you get a bonus 10 trades. So that's 20 free trades to kick you off. And if you're already a client of ours, we've got something for you as well. Our Refer a Friend program. No doubt you know 4 people who are still trading with their bank, ANZ, Westpac, Combank, and still paying crazy amounts for their trades. Get them over to us. They'll save some money and you'll get a bunch of free trades as well. If you're watching me on YouTube, make sure you hit the subscribe button and the like button. Let us know you like what we're doing and make sure you get notified the next time we do a video. Well, that's it for me today, actually. Hopefully you got lots out of today's session. I thoroughly enjoyed it. All the best for your trading until we catch up again. Bye-bye for now.